Bitcoin liquidations trigger a surge, first-time homebuyers' properties skyrocket, and Justin Sun actually ignited the altcoin plan. Bitcoin is targeting the $500 trillion reserve market. Can it really increase 200 times? Coinbase sends out a 4.5% interest rate is strong, stablecoin rates crush banks. The USICC has spoken. Can the restoration team seize control? The first ETF order gets the green light in Australia, and stablecoin intermediaries are entering a 3-year spring. Using cryptocurrency to remeasure the world, mastering the 24-hour wealth code, let's slowly get rich together. Friday, September 15th, BitcoinTV Chinese channel must unite. I'm Dong Dong. First, let's look at the top 24-hour headlines in the crypto world. The signals from the market are quite intriguing, and Coinbase's index is firmly pinned down. Meanwhile, major U.S. institutions are steadily increasing their positions, indicating continued confidence in Bitcoin, which has climbed steadily since August. Currently, Bitcoin is stuck between $110,000 and $120,000. More exciting is the derivatives liquidation distribution. Around $113,000, about $6.8 billion in long positions act as an air cushion. Above $120,000, $4.8 billion in short positions form a hard ceiling. The market's hidden lines are set at the $120,000 threshold. In the short term, unless sentiment shifts, the price will likely move sideways. But if it breaks through in one go, if it smashes through 120,000, both long and short positions liquidation could trigger a chain reaction, an accelerator. But if it slips below 113,000, an instant waterfall drop. Right now, it's just a garbage dump within a range. The real show starts when there's a breakout. Today, Justin Sun, the founder of Tron, is at it again. This time, he officially announced on the X platform the launch of Sampler, a decentralized perpetual contract platform within the Tron ecosystem, directly targeting Hyperliquid. The message is clear. He wants a share of the on-chain derivatives market. Coincidentally, the market sentiment is hot. The altcoin season index has exploded to 76, staying in the altcoin season range for 2 consecutive days, much higher than last week's 68 and last month's 46. It's about to reach last year's high of 87. In the past 90 days, 70 out of the top 100 coins have outperformed Bitcoin. Solana, Tron, INJ, ATP, these popular altcoins have seen monthly gains of 20% to 60%, while Bitcoin has barely managed a sluggish 15%. The capital has already shifted, rushing straight into altcoins. So the old question arises, once the index stays high for too long, the bubble risk increases. But as long as Bitcoin can remain stable, as long as it stays within the $110,000 to $120,000 range and doesn't break down, with new narratives like RWA, AI, and stablecoins, this altcoin season could keep going strong all the way to year-end. Chris Jin, an executive at Galaxy Digital, revealed on X that Ethereum developers finalized the timeline for the Fasanka upgrade during a recent meeting. On December 3rd, the mainnet will undergo a direct hard fork. This is the next major milestone after Denkun, and its core goal is to make the network faster and cheaper, while also significantly reducing Layer 2 roll-up costs. Testing has already shown that 2 weeks after the upgrade, blob capacity can double. How awesome is that? At the same time, big players are making even bolder moves. Since June, the number of Ethereum accumulation addresses has skyrocketed like they've been injected with adrenaline. It shot up directly from 13 million to 28 million ETH, doubling in less than 4 months. Major whales and institutions are aggressively increasing their holdings, locking up all circulating Ethereum in the market as if putting it in a freezer. Understand, once supply tightens, the market acts like it's loaded with a spring. Any positive news could ignite it. On top of that, the macro environment. With a loose macro environment, network upgrades, and accelerated institutional adoption, this Ethereum rally is like a rocket ready to launch. In summary, if the big players dare to hold, do you still dare to short it? Please like and follow to stay updated on the latest news in the crypto, blockchain, and mining circles 24/7. Click the bell and become a channel member to receive exclusive member interview codes from Monday to Friday. Speaking of accumulating Bitcoin, not everyone can learn from Michael. Sailor's aggressive leverage strategy isn't for everyone. One Capital has taken a different path. They chose a different road, no borrowing, no leverage, just steadily accumulating coins, the ultimate laid-back whale cultivation plan. This steady approach has directly attracted Tether, Bitfinex, and even SoftBank. What's even more interesting is that they're preparing to merge with Cantor Equity Partners SPAC to go public through a backdoor listing. On one hand, they're stacking coins. On the other, they're entering the capital markets, a steady strategy with a bit of flair.
Tonight we have Capital's co-founder and CEO, Jack. Mullis has made one of his boldest predictions about Bitcoin to date. Mullis stated that as Bitcoin targets the global savings market, which is worth $400 to $500 trillion, its value could increase by 100 to 200 times from its current level. Now that Bitcoin is directly entering this arena to compete, he believes its potential for growth is astonishing.
This wave from Capital at $200,000 is truly wild. They're openly accumulating Bitcoin. They've stockpiled $43,514 worth, pushing their market value up to $5 billion, which is $1,500 more than their original target at founding. What's more interesting is that companies like Countable, Similar Scientific, and Vulcan, which previously had nothing to do with crypto, are now adding Bitcoin to their balance sheets. Bitcoin is no longer just a toy for crypto insiders. It's rapidly becoming a standard asset for enterprises and digital gold. The institutional show is just getting started, and the best is yet to come. Coinbase has really gone all out in Canada. Not only did they secure a new local license, but they also launched USDC deposits with 4.1% annualized yield, launching without hesitation. It's basically a money giveaway. BN isn't sitting idle either. They're rolling out RWUSD, pegged to US Treasuries, with an interest rate of 2%. Think about it. Really think about it. This is no longer just about simply depositing some coins. Coinbase wants to position itself as the crypto world's alternative to banks. If you also consider their recent move to relinquish ETF management in the US and deepen cooperation with Circle, the logic becomes clear. Coinbase aims to make stablecoin yield products a global standard. In comparison, traditional bank interest rates are just pathetic. No wonder some people say banks are turning into retirement homes, while exchanges are becoming ATMs. The next big money magnet is very likely to be stablecoin yield products.
Circle's founder, Michael Yegorov, introduced yield basis, where you can mint $60 million worth of CRVUSD and put it into a Bitcoin pool, exploring a stablecoin plus yield model. Bankless co-founder Ryan Adams warned that this type of stablecoin could siphon off bank deposits from countries with weak local currencies, accelerating capital outflows. Governments around the world are likely to respond with regulation or controls. Otherwise, the traditional banking system will face significant challenges.
The mere sight of high returns makes one jealous. Now, a slew of companies are rushing to issue stablecoins, constantly boasting they can beat the banks. It really seems like the better the returns, the greater the risk. Think of Terra UST in 2022. They boasted a 20% annualized return, sucked in $40 billion, and then it crashed, sending investors into bankruptcy. That was a textbook example of high-yield stablecoins. Even with today's market fervor, the logic remains the same. High returns equal high risk. You can ride the wave, but don't forget there are sharks in this. Grayscale petitioned to change GPTC to a spot ETF, but the SEC rejected it outright. Grayscale refused to do so. In 2023, it directly sued the SEC, and the court ordered the SEC to re-examine the case. When Trump returned, the SEC's attitude began to relax. The latest development is that Grayscale's GDLC has finally been changed to an ETF. Grayscale appreciates it. Good guys, once the wind changes, we must strike while the iron is hot and expand the crypto landscape to the ceiling.
Shows that Grayscale is preparing to stake a large amount of Ethereum it holds. Yesterday, it transferred 40,000 Ethereum, suspected to be for staking operations. If this is true, Grayscale will become the first Ethereum ETF issuer in the US to hold staked assets. Grayscale's EDHE manages over 1.6 million Ethereum, worth about $4.8 billion US.
The US ICC had previously been playing dumb, remaining silent on whether Grayscale could impose controls, but recently it suddenly said, "Some liquidity controls may not necessarily fall under my control." This move immediately caught the market's attention, and a crack opened the door. If Grayscale really built the control function into the ETF, it would not only benefit both investors, but also impact the entire Ethereum control ecosystem. Think about established control service providers like later Rocky Pool, which originally relied on decentralized users to grow from a small number of users to a large number. Now, once Grayscale packs hundreds of millions of Ethereum into a compliant ETF, the scale and money-making efficiency will be completely downgraded to a large level. Institutional funds will favor Grayscale, a compliant peer. Isn't this true? This is equivalent to bringing governance directly to Wall Street's trading screens. In the long run, this could further centralize Ethereum's governance, pushing the relationship between network security, decentralization, and profitability to a new level of competition. In other words, this isn't just an opportunity for Grayscale, it could also be a major reshuffle of Ethereum's governance landscape. Australia's crypto regulation is a bit awkward, with a gradual policy of liberalization. In 2018, they first reversed the rules for raising funds, and in 2024, they listed Bitcoin and Ethereum. The return to ETFs looks promising, but when investors actually want to deposit their money into exchanges, banks immediately give them a sour face. When BN asked, 58% of the 1,900 people complained. Could banks please show some respect?
Another 22% of people switched banks. Now, some good news, but the question is, can the Australian crypto market use to turn around or will remain stuck at the banking threshold?
In September, the Australian Securities and Investments Commission, ASIC, announced a licensing exemption for stablecoin intermediaries. Any intermediary distributing stablecoins issued by entities holding an Australian Financial Services AFS license no longer needs to apply for an additional license. Currently, this only applies to Continue Digital's AUDM stablecoin, but if more issuers obtain an AFS license in the future, the scope of the exemption will expand.
You could say that this time, the Australian Securities and Investments Commission has really given stablecoin intermediaries a green light. If you want to advise clients, handle transactions, trade other stablecoins, or even help with promotion, you can do it directly. No need to be held back by a bunch of licenses. Why is that? The industry has long complained that compliance is too troublesome and costly, especially during this transitional period. Companies are barely surviving. This move by ASIC is a lifesaver. But to be clear, this is only temporary. It will automatically expire on June 1st, 2018 unless called off earlier. Simply put, the window of opportunity is just over 3 years. Whoever can seize this chance to build their business will secure their place in the industry.
SBF's X account suddenly acted up following a bunch of people all at once. As a result, the market immediately followed suit and got hyped up. FTT shot past $1 and is now hovering at 1. At $1.05, it surged 30% in just 1 hour. This rally was literally triggered by a single slip of the account holder's hand, and the coin price followed suit. The Chicago Board Options Exchange dropped another ETF bomb. This time, both XRP and Dogecoin were listed together. XRPR Doji is now live, bringing the market a combo of woof woof and wave wave rights. This move is truly a textbook example for diamond hands. 2 years ago, someone dumped $260,000 down to 3.62 million APX, and now it has shot straight up to 2.03 million, nearly a 9-fold increase. While others cut their losses, he held on for dear life. While others watched, he held tight. And now? His wallet is laughing out loud, and the market is stunned. Even Poland now has a Bitcoin ETF. The Warsaw Stock Exchange has opened a new path. You can buy Bitcoin with a regular securities account. Eastern Europe is officially getting on board. Meanwhile, the US Department of Justice has named and arrested British hacker Salha Jubeir. Jubeir is accused of orchestrating over 120 deposits and extortion schemes, targeting 47 companies and raking in millions in ransom. The total ransom exceeded $1.15 billion. From burning money on the dark web to standing trial in court, the plot twists faster than a blockbuster movie.
There's never a shortage of opportunities in today's market, and money never disappears. It simply flows in a different direction. Today, it might be tech stocks. Tomorrow, it might be energy. Today, it's Bitcoin. Tomorrow, it might be RWA. True masters never hold on to opportunities, but instead use their eyes to discover them and wait patiently for them. This isn't about slogans, but observation, research, and patience. You don't need to catch every market opportunity. You only need to seize a few key waves, and your wealth will change its trajectory. Remember, the market is like the ocean, with its ebbs and flows, never stopping. There's always another wave, so don't be impatient. Patience is your greatest weapon. Don't be greedy. Focus is your best weapon. Remember, wealth never cheats those who chase it, but rewards those who wait. In the market, emotions are the enemy, and perspective is the enemy. That's the main content of today's program. Our channel focuses on the cryptocurrency, blockchain, and mining circles, as well as valuable news. The book contains news and in-depth feature reports. If you find our channel valuable, you're welcome to share it, follow us, or become a member. You'll receive your membership code between Monday and Friday. Let's slowly build wealth together and add a zero to our numbers in this bull market. See you tomorrow.